Hey guys, so I was recently asked which investment I prefer between investing in the stock market versus property investing, and I thought it would make a really good video for me to talk about my thought process on this topic and share with you, and also hopefully you can also share your thoughts on this topic. I want to preface this by saying obviously I'm not a financial advisor, so please take everything I say with a pinch of salt. I am sharing this for knowledge sharing purposes, right? Not so that you can follow exactly what I am doing. So I really had to think about this topic, and I'm just sat here comfortably in my living room, and I figured let's have a nice chat about this topic. So investing in the stock market versus buying a buy to let property, so a rental property. Which one do I prefer? And also, just to quickly give you a high level explanation on how much I made from these two types of investment. And before I get into that, I just want to say personally, the name of the game when it comes to investing is diversification. I think that is the name of the game, because whenever the stock market is doing what it does, going up and down, I can rely on the property side. And then whenever all hell breaks loose with properties, I can look towards my stocks and investments. So this is why for me personally, I prefer having both. I don't prefer one over the other because each has its own advantages and each has its own disadvantages. So for me, diversification is the name of the game. But I still thought it would be quite interesting to look at a 3-month period in the stocks and shares investment side, and then a 3-month period in the property investing side. So I have my laptop here and we're just going to try. I will put screenshot on the screen to go through the 3-month period. The 3-month period that I chose is from the 1st of October 2022 through to December 31st 2022 as the period to look at for both what happened to my portfolio, and I only need to focus on my ISA investments on that portfolio, and also what happened with my investing. So when I look at what happened in the last 3 months of 2023, so in Q4 of 2022, in 2022, I had a portfolio size of over £17,000, and I had contributed over £1,000 in that period. So according to Vanguard, for my ISA, my rate of return was 3%, which means that my investments returned me over £500, which brought my overall portfolio to just under £19,000. Now let's talk about this for a moment, because we all know what has been happening in 2022, what had happened in 2022, in that the stock market was all up and down, up and down. It literally was fluctuating, as is the name of the game with investing in stocks and shares. The stock market is always fluctuating. It always changes day by day, week by week, month by month. So we also saw that a lot of funds were down. A lot of stocks were down over the last 3 months of 2022. So it is expected that possibly, there are so many contributing factors, but possibly I didn't get the rate of return that I would have gotten if we were looking at this maybe earlier in the year, or even middle 2021, when the stock market seemed to have recovered enough from the shock that it experienced due to the C word, that shall not be named, when the Rona was out here playing in these streets. So if we looked at that period, maybe it would look a lot different and my rate of return would be higher, but we don't know. And the reason why we don't time our investments is because the market is always changing. So it's more about, not time in the market, but the time in the market. That's why we invest. We're not really like, oh, I'm going to invest today because this fund is really, really low. We don't actually know if that's the lowest it will go or if it can go lower, or we don't know if we're actually investing at the peak of that stock or that fund, or it can go higher. We don't know. But this is why I believe in, what is it called, pound cost averaging or dollar cost averaging, and just put in money every single month and not just holding out to try and figure out when it's actually the market is going to go down. So the rate of return that my investment, my portfolio of over £17,000 brought me was 3%. And to add in, I had put in £1,000, and then that overall returned me just over £500. So that is what it's looking like on the investment side. Now, these numbers, please take them with a pinch of salt because there's so many factors that we need to consider. And here in this video, we are actually comparing apples versus oranges. We're not doing apples for apples, but we're trying to do the timeline as if we're comparing apples and apples. But no, we are comparing apples and oranges. That's what we're doing here. So this is the rate of return that I got from my investments. Now, if I show you a screenshot of what my property investment looked like, it's a little bit different, okay? So every single month, I have 2 rental properties, right? And from those 2 rental properties combined, I bring in 1,600 from these 2 rental properties. These 2 rental properties have mortgages on them. I have insurances on them that I need to have as a landlord, and I pay for other services as well, as you can see on the screenshot on the screen right now. So, and also I don't manage the properties myself. I pay a management company to manage these 2 properties for me. So there's all of these costs that go with that. So I bring in every single month 1,600, and I am paying just under £1,000 towards the costs for these properties. What I love about these 2 properties is right now I am making a profit. Okay, I'm making a profit in that I get, say for example, for my rental property 1, that pays me £850 a month, and about just under £700 goes towards the cost of running this property, so I don't have to dip into my personal funds to pay for this, and it leaves me with a nice round off of just under £200 profit from this. Now, if you look at how much money I put into this property, you know, in terms of the deposit, in terms of lawyer fees, in terms of the stamp duty, it is a lot, and it would take years for me to make back the stamp duty that I actually paid. The lawyer fees, obviously, those I was able to bring in within the first 2 months or 3 months of owning this property, but then there's other costs that we have to think about it. But if we just look at it on face value day to day, this is how much I charge in rent, this is how much I pay for having this home, like in terms of the mortgage, management fees, blah blah blah, all of that. I do still have about £200 left, just under £200 left every single month that I take as profit. And these 2 rental properties are in my name, so it's always fun when it comes to tax season, but on a monthly basis, at least this money is coming into my account. Tax season, well, we'll see. So, but if we look at the same 3-month period, October of 2022 through to December of 2022, I don't get a lot of variable spending on these properties, as in, you know, things that come up, but that is the nature of owning a property. There will always be something that will come up. For my second rental property, there was the shower head fell or something like that, and the management company called me and were like, oh, listen, the tenant has reported this, we need to fix it, and this is how much it will cost. So there's always this type of maintenance costs that I have to think about. So if for October, for rental property 1, we had to have the appliances checked, or I don't know, something had to be checked. I know what it said on the invoice and I approved it, so we had to have that checked. Then in November, we also had another cost of what was it? That was to check that the carbon monoxides were properly fitted, change out the alarms that I have in that house and all of that jazz, and that cost me over £100. So the cost of these things obviously brought how much I was keeping in my account down. But overall, if I was to compare these apples and oranges together, the rental side of things fared better in that I didn't have to put in anything like I did with my investment. In my investment, I put in over £1,000. With my rental property, I didn't put in anything. In fact, I received 1,600 every single month. But then if we remove all of the expenses that I needed to pay and what I was left with, I still fare better with the rental property in that I have over £1,000 as profit for those 3 months of the year. The last 3 months of 2022, I made over £1,000 in profit compared to over £500 in profit that I made from investing in the stock market. But again, like I said, a lot of consideration has to be made for what's happened with the stock market and all of that jazz. But again, we are comparing apples and oranges. But if I was to compare it right now, what worked best for me in this period was rental property. Now, would that always be the case? No, it would definitely change, and especially with the way the UK government is moving, we don't know, because I know some landlords are finding themselves in a negative equity situation where their new mortgage and all of the fees and costs that they have to pay for their rental property is actually more than the rent that they get in. Obviously, when that happens, those landlords, and I'm not talking about these companies that have multiple properties and are just rental income hungry. I'm talking about us, the small guys, the small landlords out here who have no choice but to increase the rent, so put that cost towards the tenant or sell the rental property. And with the way the market is flowing, yes, there's always people who are looking to buy properties, but if we are to be honest, corporations are swooping up a lot of rental properties that are coming onto the market. So cash buyers are going at it like that, whereas the rest of us who have to get a mortgage to buy that property, blah, 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 are really missing out and are also just the minority. Corporations are the majority, and they are the ones that are increasing their rents like there's no tomorrow. Today I was watching the news where this guy's rent is in London. Obviously, London is exceedingly expensive. His rent is moving from, I think he used to pay 1,800 to now £2,500. That is ridiculous, but that's exactly what is happening right now. So there's always something that's happening within the property market, property investing, but also with the fluctuations of the stocks investing. Each has its advantages and disadvantages. So like I said, for me personally, I do not have a preference. I like property because I'm always getting this monthly income, but that's not my only plan for my desire to retire early or for even my future retirement in my later years. I want to diversify my investment. I want to invest in more than just the stock market. This is why I invest in property, but I also invest in myself so I can bring in more money that I can send to both these avenues. So a lot more money being sent towards my investing in the stock market, but also a lot more money being sent towards me purchasing more properties. So again, I hope you found this video useful, because for me it was just an interesting question, as in, for the stock market I got a 3% return, for which meant it was about over £500 that I made. And then for my rental property, I had double what the stock market brought me. But if I was to choose right now which one I prefer, I want to say for the short term, property. For the long term, the stock market. But I'm not choosing because I have both and I'll continue to invest in both. So thank you so much for watching my video. I hope you enjoyed it. If you did, give it a thumbs up, subscribe if you haven't already, and I'll see you guys in my next video. Bye.